What's up everyone, welcome back to the channel. In today's video, I'm going to be giving you a market update discussing the very important subject of whether the bottom is in. Obviously, we've seen a nice response over the past week since Bitcoin had a brutal sell-off. Many altcoins during this period have started to bounce 20-30% in some cases over the weekend, and there is growing evidence to suggest that potentially we have set in a local bottom, and if that's the case, then many trading opportunities are going to arise as a result of that. So I want to talk about the recent developments over the past few days, speak about whether I think the crypto bottom is in, and what I am doing to position my portfolio accordingly. Super actionable show today to help you guys navigate this next little period in the market. So let's begin by discussing what's happening in the macro side of things, which has obviously been dictating price action recently. Since Trump did his famous Truth Social post saying it's a great time to buy, we've had one, a 90-day reciprocal tariff pause being announced apart from China. Two, the Fed saying they're absolutely ready to stabilize the market if needed. Three, reciprocal tariff exemptions on smartphones, computers, chip-making equipment announced. This one was kind of crazy because essentially what they are doing is they are allowing essentially big tech, Apple, Nvidia, Microsoft, Google, to bypass the negative effects that the Chinese tariffs would have had on their bottom line. Obviously, there's a bit of corporate lobbying involved here, and it turns out that he essentially backed down on a lot of the tariffs for these goods, which resulted in the market rallying quite nicely across the tech stocks. You can see Apple's pre-market is open in the green alongside a bunch of other tech stocks as well. So big tech really liked this news, and clearly crypto right now is extremely correlated to big tech as it's just an extension pretty much of the stock market at the moment. It's why we got the big dump, and it's why you're starting to see a bit of a recovery at the moment. Number 4, we have Trump asking China to request a negotiation call, showing that they are willing to negotiate or at least have that discussion. And then finally, the S&P overall added $3.5 trillion in market cap from the bottom. A pretty crazy turn of events. Now, in my opinion, I don't think we are completely out of the woods from a macro perspective. However, following on from the thesis I had in my last video, I do think this buys us a little bit of headroom in the short term, especially over potentially the next 8 to 12 weeks, which is a theory that I'm going to be discussing in today's video as to the reasoning why a crypto bottom may be in. And obviously the short-term catalyst of having the reciprocal tariff exclusions for computers, smartphones, and chips does help the market as we're extremely correlated to big tech. So that was the main development over the weekend, but of course, this is rapidly evolving and I've been keeping you guys updated over the past few days. But what I said in my last video about short-term headroom and then maybe a bit more pain later down the track, I'm pretty much sticking to that thesis because nothing has changed since then apart from that news, which only really underpinned my thesis of potential negotiations or easing on some of the tariff news heading into the next week. So how's the market responding? We see the S&P from its lows is now up 14%. The Nasdaq's also up around 14%, set to open in the green again today. Bitcoin obviously front ran that over the weekend a little bit, rallying from the wick low to the current level, 14%, also quite a strong move. We even see this range high now starting to establish on Bitcoin. So if you want to do some very basic technical analysis, you have your support at around 78K, multiple deviations below, but the candle bodies never actually closed below 78. And then you have the range high as well starting to form. You see we've had a few wicks deviation above, but none of the bodies actually closed above 87 as well. So the range is compressing from around 78 to 87. It's roughly a 10K range. And in terms of Bitcoin, I would be trading the extremities of both the ranges. So if you open to Bitcoin long, I would look to ladder out a little bit of profits heading into this zone. That's something that I'm personally doing with my big Bitcoin buys that I talked about last week to make some quick profits. Honestly, the profits on the buys that I made during that huge tariff FUD day rebounded a lot quicker than I thought. I thought it was going to be many, many months of resolution, but I was buying because my belief is to buy peak fear in the market. I didn't expect to be taking profits on some of those trades much earlier across the Nasdaq and Bitcoin, but I'm happy to do so because I at least can secure some profits after lowering my stablecoin position to get back to a nice basis where I'm comfortable. And for me right now, that's 50% stables. Now, for the average person, I don't necessarily think 50% necessarily applies. It's just for me personally, because I am currently really focused on building and scaling my business, because I want liquid capital available for opportunities and high conviction trades, and I'm just emotionally better with a higher stablecoin weighting. That's the weighting where I prefer to be around. And I don't know if you remember my content from Q4 last year, but my entire plan with stablecoins way back from 6 months ago has been to progressively shift heavier into stables to hit around 50 to 60% by April. So it's funny that the path has been so uncertain, but the destination is actually the exact same as what my plan initially was. Obviously, I wish I took heavier profits back in December, but we've covered that in many previous videos, and I'm overall happy with where I sit. Not happy with all of my execution, but happy overall how I've played the last couple of weeks and being able to shift a tiny bit more risk off now that we're getting a big move. That is not the case, however, though, on some altcoins, which I'll discuss later. I'm purely referencing my Bitcoin and stock buys from last week. I will get into altcoin setups because there are some that I'm actually longing right now, and I'll tell you how I'm doing that in accordance with Bitcoin in a second. You can see that Bitcoin also has a diagonal breakout trade. This is good, and I wanted to point out this trend. However, I think generally speaking, I've always had much more success with horizontals on Bitcoin because it tends to form these ranges and it has these sticking points in terms of where the order books are thick in terms of liquidity. And right now that's 78 and 88. So this is mostly what I'm playing off. But I also wanted to point out the fact that at least in terms of the trend, we are looking a little bit better on Bitcoin, although technically it is a lower high and these are lower lows. So you want to at least get above that 86K region for a few days and consolidate there in order to validate a potential move to the upside. So next I want to talk about whether the bottom is in for crypto. But first, I do want to talk about one of the biggest altcoin moves that happened over the last few days. I think this is extremely warranted given there are many lessons here, and that is Mantra. This is a coin that I've spoken about on the channel for, I think, over a year now. I mean, I first started talking about it at 20 and 30 cents. So before we got that initial breakout, it was actually one of my best trades of 2024. Albeit I took profits a little bit early. This ran up, I think, much more aggressively than many people thought. In fact, these lines here, these are my original lines that I had for the entirety of last year. If you were watching any of my content, these were the zones that I was trading it off. So to put it in perspective, it went way above the initial range where I was trading Mantra all the way to $8 to $9. Now, at a certain point, and this happened in mid to late January, I started to get a little bit wary of the chart because it looked like it was being manipulated with these massive squeezes to the upside, and that prompted me to exit the majority of my position. That's something I did speak about on the YouTube channel and in my Discord. You can see here in the general chat on the 30th of January, I said, by the way, Mantra price is clearly manipulated, just look at the chart. I also said in many AMAs that I was a little bit skeptical of the price action and at some point was actually looking to short Mantra. Now, unfortunately, I didn't get my short, even though I had kind of earmarked it as a generational short. Even with my friend, I was discussing with him on February 10th, as you can see here, WhatsApp screenshots of me saying, by the way, ex-friend, I blurred them out for privacy reasons, told me to short Mantra in March. I know who's pumping it, ... So obviously, lots of rumors were going around at the time, but I couldn't validate anything, and I didn't have time to actually get my short in because of how quick this collapse happened. But the lesson here is that when there's something fishy, when something smells, or where there's smoke, there's probably fire. And that is kind of what ended up playing out here. The price action was fishy. Did I think the breakdown would be this big? No. But at some point, I was expecting a breakdown due to the manipulation in the market. And by the way, if you guys have been following my channel and watching my videos where I cover RWA, you'll know I spoke about Mantra a lot, publicly writing it from around 30 cents to $3. You'll know in those videos, I talked about some rotations that I was doing from Mantra into checks around $2 to $3, and then, continuing to take profits on the way up. I even sold a bit too early. I think some of you potentially, if you took profits, which you have to if you're up huge multiples, especially from the early entries that we got on the channel, I think some of you were up even more than me because it went to $7, $8 and it maintained there for months. So by no means did I play the Mantra trade perfectly. I actually should have held longer and I would have made more. And same with Ondo. I actually sold too early on Ondo, roughly 60 to 80 cents before it went to $1.50 to $1.60. However, there's a good lesson here, and that is it's better to sell too early than too late in crypto. Even if you've left profits on the table, very rarely are you going to look back and be like, man, I should have sold later. usually I'm just happy to sell at all because most tokens eventually will end up trending to zero. So it's better that you lock in some profits than no profits. So, could I have potentially made a 20x on Mantra instead of a 5 to 10x? Yes, but it also saved me from dealing with this huge drawdown that we are currently seeing at the moment. Now that's Mantra itself, but I want to talk about some of the broader lessons that apply to the overall altcoin market. The first thing that I think is very important here is that market caps are an illusion. So although $5.2 billion of market cap was erased from the Mantra price during this dump, it was one of the biggest tokens in the market, that isn't really that telling because market caps are kind of fugazi in crypto. A $5 billion market cap, for example, in the stock market is much more meaningful than a $5 billion market cap in crypto. I'll give you an example. If I dump $20 million worth of a stock with a $5 billion market cap, yes, I'm going to drop the price, but it might only drop 4 to 5% because there's lots of liquidity in that market. There are counterparties to buy, and there's not as much leverage. In crypto, because prices are highly manipulated via perps, especially, which is what I think happened here, and it's very evident on the chart and has been for quite some time, if you say sell $20 million worth of tokens against the $5.2 billion market cap, you're going to drop price a lot more, potentially 20 to 30%, and then that can lead to a liquidation cascade, which likely happened here, which could take price down 60, 70%. So you see why market cap's fugazi, because in the stock market, you could have a $5 billion stock, which is barely impacted by a $20 million sell, and in crypto, you could have a $5 billion crypto, which is heavily impacted by a $20 million sell. In fact, if you dump $20 million at once of most alts, you're going to absolutely smack the price. So you see why market caps are kind of an illusion. It's just really, the most important thing in crypto is liquidity. How liquid is that token? Now, if you want to check out how liquid a token is, there's a very simple way, a method that I personally use. You can go into any token, let's use Mantra for example, and you can go into CoinGecko, you can click markets, then you can look at depth. The 2% depth of a coin is basically how thick the order books are on either side. So even though Mantra is $1 billion coin now, or an $800 million coin, if you look at the 2% depth, the liquidity is only around 100K. So that means if you sell 100K, you would dump the price 2%, or if you bought 100K, you would pump the price 2%. Now, we can go across the entire market and actually look at the 2% depths. For a coin like Solana, obviously it's much more liquid. The 2% depth on Solana is on BitGet, 6 million. Then on Coinbase, 5.7. So you could theoretically sell $5.7 million of token and only affect the price 2%. Let's go on to page 5 of CoinGecko and pick a token. Let's pick a random token. Let's say the Xano token. I've never heard of this before, but I assume, because I haven't heard of it, it probably doesn't have the best depth. This is actually a great example. The depth on this is $900. So you see how you have a token that's $100 million market cap. Sounds huge, but if you dump $1,000 worth of tokens, you're going to drop the price 2%. Imagine if you dump 10, 20, 30K. Obviously, it's not linear because at certain points in the book, there'll be more liquidity stacked, but you're going to wick price massively. And that's what causes massive wicks on tokens. So low liquidity isn't necessarily a bad thing. You just have to be very aware of it and aware that if a token has low liquidity, it has a little bit more risk in terms of volatility. It also means that price can reprice to the upside. So thin books is an easy way for projects or funds or whoever to manipulate prices higher. I just wanted to teach you that today because I think it's very important not only to pay attention to market cap, but also pay attention to liquidity. And it's also an important constituent of actually getting a good price when you buy and enter a token. 2 more lessons from Mantra before we move on to whether I think the bottom's in, which is the main topic I wanted to discuss today, but I think this is super valuable. If something smells off, especially price action wise, it probably is. So in crypto, there's no need to force every single trade. If something feels slightly off, best avoid it or best treat it with caution. And finally, I want to raise a bigger question just to get you thinking today. If valuations, like I just discussed, are largely fugazi, then how many other projects could this happen to? Now, I don't think every project was as manipulated as Mantra. However, I think there are other projects in the market which also have a much lower floor versus their current valuation. You can make the argument that a lot of tech altcoins in the market probably have a floor of literally 0 because there's not much intrinsic value. So you have to be really aware of the fact that over time, most tokens will trend to 0. And as long as you have that in the back of your mind, you can trade accordingly. What are some things you can do? You can implement invalidations based on key levels so you make sure you're not exposed to that really aggressive final leg of downside. You can make sure that when you invest, you only invest money you can afford to lose. You can make sure that you always follow risk parameters when you invest. Make sure that your sizing is in accordance with your risk profile. All this sort of stuff will help you in a market where eventually most alts trend to zero. Now, before they trend to zero, they can pull huge multiples. And one thing I do want to say about Mantra is it's still actually above my initial entry price, which is absolutely insane, which means that even after all of this, it's still technically up. And that's just because it had a huge run up before it ended up dumping. So does it mean it was a bad trade? Not at all. This was a fantastic trade and it was a huge opportunity to make money. So even if coins eventually go to zero or have huge crashes, it doesn't mean you can't make money off them in the short term. Just keep in mind that most tokens will trend to zero, but in the short term, there are huge trading opportunities to make money. And as long as you do that, you can make money in the altcoin market and then treat the super fundamental coins, there are only a few in the space like Bitcoin, as long-term coins that you're happy to keep adding exposure to. So now that we've discussed that, I want to talk about the question of whether the bottom's in. And this question was first posed, or a statement rather, posed by Smiley Capital about the fact that he highly advises everyone that didn't make it to lock in for the next 8 to 12 weeks and do it ASAP before the laggards waiting for 7 confirmations realize it was a bottom. You will have downtime mid-late summer, possibly into September as well for your vacations, which is something I agree with. Summer is usually choppy. It's usually low volatility. So that period of the market, I think, will be the same as most years. But I do want to touch on this potential 8 to 12 week time frame because it's pretty much in line with what I said in my last video. I talked about the 90-day tariff exemption and how that could be a rough time frame where the market has headroom. And that is exactly aligned with the 12 weeks that Smiley points out as his bull case. And then, maybe a slightly more bearish estimate would be 8 weeks because that accounts for maybe a bit of front running on the new tariff news cycle. So to me, in terms of timeline, this makes sense, but we do have to look at the charts to see whether there's, high confidence that a bottom's in. So if you look at Bitcoin, you can see that it kind of does look like a double bottom. You have your first bottom here, and you have your second wick here. Then you have a reclamation and a bullish retest. So structurally, this does look quite good. I do like the fact that you almost have this inverse head and shoulders pattern starting to form with technically a higher low on the daily and 3-day. Higher low on the 3-day and the daily. So this is actually a nice setup for Bitcoin. And I do think balance of probabilities, it suggests, as well as the momentum of the market, that a local bottom could definitely be in. And this is somewhat evidenced by the fact that most bottoms are formed, or at least local bottoms, on peak fear. And I actually pointed this out at the time. Recession fears were at their highest levels since 2020. It was absolutely insane. Everyone thought a recession was coming. The probability was almost 66%, and that was actually the bottom of the market. So it's not recessions themselves that cause markets to bottom. It's the fear of a potential recession which causes markets to bottom. And that's one of the reasons why I think that may have actually been the bottom, as well as the fact that more than 50% of investors were bearish on the market for 7 straight weeks, which is actually the longest streak since October 1990, with the stock market fear and greed dropping to like 4, which is absolutely insane. We haven't seen that in a long time. So for that reason, I think Smiley could be correct here. However, just because there's maybe a high probability that the local bottom is in, does that mean you should be aping into altcoins or treating this like a crazy bull run? Well, not necessarily. I want to run through what I'm doing in the face of this, because what I'm not doing is just allocating to the market willy-nilly. I'm being really strategic about how I'm entering. I accept the fact that balance of probabilities, potentially the bottom's in. However, no bets in crypto are with 100% confidence. Unless you have 100% confidence, why would you risk 100% of your portfolio on a thesis? If you have 55% confidence, that's actually enough to take trades, but you have to accept there's that 40% unknown, 45% unknown out there that you need to protect against. And this is the way that I would go about it right now, given the bottom is in thesis. Firstly, don't trade with a super long time horizon. If you think that there's 8 to 12 weeks of headroom in the market, then why would you trade with a crazy long-term horizon, buying a bunch of altcoins that you're going to hold for the long term? You're not thinking long-term here. You're thinking short-term, opportunistically here in terms of a trading mindset. Now, that doesn't mean I don't have a long-term portfolio. I do. My long-term portfolio remains intact. I continue to tweak it. I continue to add good stuff that I think is long-term undervalued. However, that is separate from any trades that I take within this 8 to 12 week range thesis. I think you need to be constantly tweaking your long-term portfolio, but tweaking doesn't mean trading. I don't think trading it's a good idea. I've actually been selling some of my longer-term portfolio just to raise a bit more capital so I can look at potentially reallocating to some shorter-term trades. So I've actually rejigged it the other way, but how you tweak it depends on what you're doing. The second thing that I think is really important to do, because I skipped to 3 for a second there, is playing off the technicals. I think each individual altcoin has its own respective technical setup. So what I wouldn't be doing is saying, okay, I think the market's bullish, let me long a bunch of alts. No, I'd be really selective about which setups I monitor, and I'd be trading the technicals on each alt. Why? Because if, let's say, the 40% chance that, we make a new low in the next 8 weeks ends up coming true, at least if you treat it like an individual trade based on technicals, you'll also have technical invalidation because of that versus a long-term trade. That way, you're able to play continuation on alts without risking your thesis being potentially wrong. So if you agree and think we potentially have some more relief coming in the market, you won't be absolutely burnt if that doesn't play out, because it's really hard to predict an environment where Trump is coming out every week and changing the landscape of the market. Who knows, in a week, things could look really bad again. I think you got to prep for both scenarios, which is also why I'm going to use this pump as an opportunity to scale a little further out of some long-term stuff and put that into my short-term trading basket and then take shorter-term trades with that, because at least if I lose a little bit and get invalidated, I'm not totally getting wrecked on my long-term spot positions. So now let's actually go into some setups so I can give you some examples of the kind of stuff that I'm looking at right now. One setup, which I think is pretty hard to ignore at the moment, is Altcoin. It's been one of the strongest coins in the market in terms of price action. It was one of the first responders, and I'm seeing a lot of mind share for it on X. And it's actually following this price action pattern that Paradise pointed out in my last stream with him of rally, base, rally. Rally, base, rally, base, rally, base. This is a pattern that, as you can see in front of you, Paradise uses as one of his bread and butter plays, and you can use this alongside the stochastic RSI, which he teaches in the Mars High Club, that entire strategy to actually print on these coins, and he's actually been trading Altcoin based on this. If you go onto, let's say, the 30-minute chart, these bases become a lot more clear. Obviously, if you're trading on the low time frame, you're not going to enter on the daily, you'll enter on 1 hour, 4 hour, 30-minute charts, and you can see these bases start to form, breakout, bases start to form, potentially another breakout coming next. So this is one to watch and put on your trading list. You can see that I'm actually trading it on Weex right now. If you guys want to trade on Weex, I have a very, very good promotion. I know a lot of you haven't been making money in the market recently, but this is a way for you to essentially win free money. So all you need to do is go to the link in the description, sign up for an account. It's non-KYC. The first thing you can do is deposit. If you deposit and you transfer into your futures account, you can get a bonus of up to $1,000 as long as you maintain it for the correct period. And you can also get a bonus of $8,000 as you start to unlock trading volume. But I know some of you won't be doing huge trading volume. So the good news is, if you just deposit money, for example, $10,000, you'll get $1,000 of a free bonus as long as you hold it in there for 7 days. If you don't have a lot of money, that's also fine. There's promos for $200 and $1,000. So if you put in $200, you'll get $40 for free. And if you put in $1,000, you get $160 for free, as long as you hold it in your account for 3 days and 5 days, respectively. Once you've done that, you can head over to the link in the description. I believe it's the first link. And this is the spin the wheel that you can do once you sign up. This is based on futures volume. So the first cumulative volume target is super, super low. You could unlock this super easily. And obviously, the more you trade, the more you're going to unlock over time. But you could potentially win a Louis Vuitton bag, an iPad Air, or even one Bitcoin, which is $84,000 by spinning the wheel. Or you could win one of the lower end prizes, which is $5 or $10 or $1. But who knows? You don't know what you're going to win. And that's why it's worth spinning the wheel if you have an opportunity to. So if you are a trader, may as well build up some volume and spin the wheel. If you're trading anyway, for example, this Altcoin setup that I'm talking about here, or if you are not a trader, that's fine. You can just deposit, literally keep your money in the exchange for a few days and just make some free money. So I'll leave a link in the description below if you want to check that out. One of the better exchange deals that I've seen going around recently, and that's the reason I partnered with Weex to give you guys some very, very good bonuses and campaigns over there. And of course, it's good because it's non-KYC, which can appeal to certain people. So that is the Altcoin setup. Next, Solana is an interesting one. This setup has actually started to play out since this tweet here. And this is basically a high time frame reclaim swing trade, which is currently in play. It is around $131 right now, but the confirmation entry is around $129. So I do recommend charting this on your chart, setting this level from December 2023, because that is the key pivot point that we are currently testing. Again, that could be a nice spot for a potential reclamation swing trade. The great thing about this is you have invalidation below, which basically means that, you're entering without risking downside, as I mentioned before, if the thesis is wrong. That's why right now I'm focusing a lot on the, short to midterm, if you call 8 to 12 week midterm spot/low leverage swing setups instead of positioning super long term right now. Another niche I think is going to be quite dominant even over this next little period is AI. So a lot of the AI tokens are heavily beaten down. I'd really be looking into some of the AI agent plays that were heavily beaten down. I'd be looking into any token that's just been absolutely smashed to the ground, but is now starting to show signs of reversal and show signs that a lot of the selling is out. I can run through a few of these right now, but obviously there are going to be, a lot more based on how you like to trade. First thing is Tau, BitTensor. This one's quite nice because it held the lows nicely and you have this potential reclaim setup at 250. It could do something like this and then you have nice leeway back to 350 in my opinion. So Tau is a good one. The next one is Edge. This is another potential reclaim setup. I don't know if you guys remember, but it held above 80 cents, even above $1 for a long time, even when the market was crashing. It was a victim of the recent crash, but the rebound on this is quite nice. And a reclaim setup here of the 80 cent level, it's at 74 right now, could be a nice trading zone. I also think there are a lot of catalysts coming for Edge, which I like it when I can match technicals and fundamentals. And they have lots coming on the robotics side, which I'll talk about in a future video, which I think is a really exciting narrative. I'm calling it DePi, not DeFi. This is decentralized physical AI infrastructure, and Edge is a key player there with their supercomputer. So I think on the fundamental side, it also aligns with the technicals. Just want to see this reclaim, and then I think it can also come back up and push back to that $1 plus region. Morphware is another AI project that I've spoken about in the past that I also think has a really interesting setup. It is coiling. What do I mean by coiling? It's compressing into a much tighter range. This was quite a loose range. It's held this low quite nicely at the 0.037 level, and volume has been increasing slightly into compressing price, which tends to lead to breakouts at some point. Obviously, that can mean a break down or a breakout to the upside, but I do think because we have the higher low starting to form, I think we can break out here quite nicely. You see this trend line? I'm just monitoring two levels right now. I've got an alert set on this level, this diagonal, and I've got an alert set on this level, and that's also going to correspond with a money noodle flip. So I think this could run aggressively if it gets the right volume on this breakout here. And like Edge, it's also got some good fundamental catalysts. For example, the AI agents that they're going to launch, that they're building on their own stack, powered by their own B200 GPUs, which are optimized for cost. Obviously, the entire Morphware ecosystem is surrounded by the fact that they can mine at a much cheaper rate due to their GPUs and their energy arbitrage. And that basically means that it's a revenue generating protocol. So those are two that I would watch that I think have flown under the radar a bit and are now starting to show some interesting technical setups. Obviously, BitTensor being the big one. I mean, even something like Anon has a very similar setup to Morphware, where you've also got this higher low starting to form, and then you've got this diagonal trend as well. You've also got this reclaim of the key low. So, I mean, it's had, I think, top mind share multiple times over the past couple of months. And although price action has been beaten down, there are a lot of JITs on Solana. It also goes the other way. When people are speculating on Solana, things can also reprice aggressively to the upside. So it's another one of these setups like XMW, where you have this trend, these two trends converging, and then a high time frame breakout level as well. So I'd be definitely monitoring this one. And I've also got alerts on for that at the moment. I won't give you too many more because those are some of the main ones. Obviously in Mars High Club we're charting all the time, but there are 2 new launches I also think you should add to your charting watch list, and that is Nillion. This is a new AI launch which really launched horribly due to the market conditions, but fundamentally it was one of the most hyped projects in crypto. So you also have a higher low. What I want to see though is a few days of it actually holding above this level, and you've also got the money noodle. So I want to see a little bit of an impulse, and then on a pullback I'll get in and then look to target that 50-cent zone. I think it could go higher. I think it could honestly go to some of these levels again, just because these new tokens tend to follow this airdrop fractal of them beating down, then consolidating, then expanding. And with new launches, people ask me all the time, Mars, should I buy this new launch? And what I say is, look, just wait for it to find a floor. Never rush with new launches. Like Godzilla, for example, I think in terms of market cap, it's actually undervalued as one of the most hyped and top gaming projects of the cycle. But I'm just waiting for it to find a floor, and it looks like we are starting to get it as well. You have this floor here at 4 cents, and it's now starting to hold above the money noodle nicely. So a few more days of good price action on this, and maybe an actionable trigger setup on the lower time frames, and I would actually jump in a gun trade with invalidation, just like I'm willing to jump into Nillion. We'll be updating you guys with the exact entries and exits in Discord. Obviously, I can't really do it on YouTube because it's impossible to make a video exactly when individual setups trigger, and it makes no sense because of it can happen at any time. So if you do want to stay up to date in Discord, we have the Trading Talk channel where everyone just trades and charts all day with our expert analysts. Obviously, we've got Paradise, Morin, Doc, and Fabian who are also posting setups all the time. Paradise's trade ideas channel is always busy. You can see he had a big trade on Altcoin, so he caught that move, as well as a bunch of others. And we have a trading course launching very soon, and we also have a traders hub for you to actually learn to trade. You can go through these exercises and learn how to do RSI, AO divergence spotting, FVG strategy, LTF entry model identification. You can learn to build spaghetti charts, spotting relative strength, weakness, enter coins on lower time frames, all that sort of stuff we teach in the Discord. So we do have obviously the live setups always happening and the trading chat always buzzing, but we also have the educational side of things for you to actually learn to trade and manage your risk as well, which is obviously super important. So there's a link in the description below to the Mars High Club if you really want to maximize this next period in the market. And then there's also links to Weex so you can get access to the amazing campaign that I have set up for you guys. So hopefully you enjoyed this market update. I'll see you later in the week, and I'll catch you in the next one. Have a lovely rest of your day. Peace out.